All right, ladies and gentlemen, I hope you had a wonderful day. Yesterday, it was Tesla saving the market after hours, and now today, it's Meta killing us after hours. This is where we closed. The market actually had a slight green on the day. But take a look at the after hours now following Meta's report, and now we have unwound pretty much all of the progress of yesterday, taking us back to the higher end of Monday. So, Chad, we have a big day tomorrow. We have a lot more earnings. We're going to get a lot more out of Meta. I'm going to talk about what happened here because it was interesting. We even had a nice little discussion on stream about it, and it kind of played out, ironically enough. So, that's going to be a big deal leading into tomorrow, but there's more mega caps. There's actually going to be bigger data. You had screaming actions on the bonds and the yen today, and now with the market kind of pulling back with these earnings, it's about to get a little crazier here, Chad. So we got a lot to talk about. I have the recap. I have the plays, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, before we get into any of the keys, I'm telling you, there's a lot to look at in terms of the chart today and what happened. So I guess I'll go to a 2-day chart. We started with another gap up in the morning. Believe it or not, more earnings than not were good. It's not as if we have been getting bad earnings. Even today, after hours with Meta, they slightly beat, but then it was their guidance and things in regards to spending that spooked the market there a little bit. But it's not as if we've been seeing bad earnings. If anything, just quite not that good, but we did wake up with more relief. People were feeling good. You weren't getting any war headlines. The only thing that was bad about the day is that bond yields were a little bit higher, but even data overseas, what's going on with Europe, people were feeling optimistic, and they were really vibing out with this whole relief rally in day 3 after everything, and everyone was getting excited for earnings. But then we did the whole go nowhere after the first hour, because yesterday we just took off. Every other day we did that dance for the first hour. We did it again today, and then we sold off quite a bit. You actually kind of got close to the danger zones, then you bounced out of nowhere, and then you dropped again, and then we closed green, and then all of this happened after hours, and now you're below any of the danger zones. Literally, after hours, you have given up all of the progress. This was literally the open. You're back to pre-market of yesterday. So this is where I'm saying now, coming into the keys and what happened, there was a lot of action, but it was literally one story intraday and another story after hours. And I'm telling you, tomorrow you are going to get the same thing. And if you're not familiar with what's driving us intraday, it's responding to some of the earnings in the morning and how the market's taking it. But today, on every single one of these moves, you have to keep in mind the bonds and everything else related to rates and all of this pressure. The fact the dot plot is lagging behind the market, all of these things have been playing out, not to mention just global currencies and a lot of other things, even oil markets, all kind of going nuts too, and then thankfully not responding to the war. But the whole point you got to realize is that you are in earnings mode, and we still have bigger, broader things that we're responding to. Until these earnings wrap up, especially as the data is big, it's going to be one story intraday, even pre-market, and another after hours. And that's what I'm saying now for tomorrow. We will get the same thing with the mega caps. The only difference is you are going to be getting the GDP data in the morning, and that data is actually one of the bigger sets of data this week, followed by PCE on Friday. So the next couple of days till the end of the week, I hope you are getting ready for this. So keep that in mind. But now coming into key number 2, it's related to what we just said. And this is kind of something you got to watch out for. Like I'm telling you, it seems like the theme for this week is going to be one story intraday, one story after hours, playing this little earnings data game. But remember last week, it had to do with that lag between bonds. Well, guess what? This whole week so far, tomorrow is about to be Thursday, you have not seen anything. There's really been no relationship. If anything, it's been inversing, but this whole week, as the market has been getting relief, the bonds are disagreeing because they have not gotten any relief at all. So if anything, it's kind of a strong disagreeal given that the bonds today even climbed towards 4.7 again. So maybe this gap will close with the data. We were talking about that today on stream, but it's very clear that bond pressure that built up over the last month, you got 3 days, 2 days and a half now, maybe 2 days of relief. That bond pressure has not gone anywhere, and the market is still kind of responding to that. That's why I'm putting it here with what we saw today. Like I'm telling you, the up and down swings, these wild, okay, we gap up and then sell off. Why are we selling off on any headlines? Without any headlines, well, the bonds are going to be the answer every time you randomly sell off until the yields go lower. Now that we're above that 4.5, like I'm saying today, it's like you had this gap up and started selling off, and people are like, what could it be? What could it be? It's like you had the 10-year right below 4.7 hitting another high. The bonds have not gotten any relief at all. Tie that to the story with rates and now even upcoming data, it's still a pretty big deal. So keep that in mind moving forward. We'll see if we get any change on this tomorrow or now as we get the big data. We'll see if Thursday and Friday is the day for the bonds to move. But now finally, I can't stress it enough, bro. That after hours move was massive, and the thing I'm telling you, just like yesterday, you saw how Tesla was able to move the market after hours, and they're having big effects. There's going to be a lot of companies tomorrow morning as well too, but you're seeing how Tesla and Meta are moving the markets after hours. Keep this in mind for Microsoft and Google. It's going to be a big event, and I've been reminding you, the relief is not real because we have these events, and I think you're getting a crash course in that. So keep that in mind moving forward. We'll see how these earnings turn out, but it's definitely giving us a lot to react to and setting up the runway. So now, let us get into the plays. So, right off the bat, I got two different plays. One is a earnings that's coming up tomorrow, and one is for next week. But Amazon and Google, I made these plays today, and I went with the pre-earnings on these, and I could be a little bit early. Amazon's going to be next week. Google is going to be tomorrow. But the way I'm looking at these, I may start wanting to snag some of these options on the big tech companies, especially the mega caps that haven't reported, because at this point, the first good tech earnings, it's going to wake up the premiums. Otherwise, all the call premiums have been getting clobbered. Even Meta, if you looked at that coming into the report, calls and puts both got murdered. So it was pricing in a lot, and Meta did move beyond. We'll see where that one opens up tomorrow. That'll definitely be a post-earnings continuation. But Amazon and Google already responded in reaction to the Meta, and then Amazon, like I'm saying, it's early, but the moment we get any good thing, if Thursday we get any good Microsoft or Google, I think you'll start to see premiums get a little bit of life breathed back into them. So watch out for that. That is play number one. But again, the watch list. If y'all have any questions on it, that's why we got the watch list, baby. But as far as the plays that I made today, as far as Amazon, I grabbed two of the 205s at 59 cents. I mean, those are probably going to be down now after tomorrow, but we'll see. So keep these in mind. I believe these are around 2 standard deviations. And then for Google, I bought the out of the monies. They were a lot cheaper. I bought 5 of the 185 calls for 9 cents. So going with the cheaper plays, again, trying to keep it smaller, but I am buying more contracts on the pre-earnings so that I can make them free. That is the general idea with all of them. So those were the first 2 plays related to play number 1, but watch how those pre-earnings play out. Then play number 2, this one's a little interesting. Honestly, I just got reminded about it. TDOC. And UNH announced today that they're like Optum Health is closing their mobile health division, pretty much like their e-doctors. Bank of America even came out. They're like, that's good for TDOC. We were looking at this right when the news came out, so there was a couple of comments on it, but it just reminded me of that TDOC and them kind of being pinned. One, look at TDOC, it's related to news, but also in the spirit of earnings, don't forget about some of these companies, if they've really just been holding a low, been refusing to die, and then haven't done much in the last couple of earnings, they may have some of those longer-term contracts that could be a little cheap. So we hit TeleDoc in the past, and it has been going lower. I think there's some higher quality names at higher prices. Like, if you've been there, you've seen it, that are kind of more pinned. So we'll find out. But that news was interesting. A little bit of reaction today, but that is play number 2. And then finally, this one, I still got murked on the pre-earning shares. I got to decide tomorrow. I wonder how the puts are. I don't know if there'll be any good hedges. We'll find out. Otherwise, I may either take a loss on this for my pre-earning shares and wait till after earnings, or I'm going to hold my shares. I grabbed 1,000 of these way too early, but dude, this one is going to be huge. Not only for me and me making a trade on it, but the fact is, Intel, it's a chip name tomorrow. Remember, we've been going off with these earnings. This is a name brand there, and the difference between all of them, they've already priced in a lot of downside. So, some of the names yesterday, Tesla's earnings were not good. They went up 10%. If the bar is set low, are we going to get that? Could have been worse effect. We're going to find out, but I really want to see, because if Intel goes even lower, that will be another name, just like AMD, throw it into the bucket of chips, selling off a good majority of that run-up here of this year with all the AI hype. So we'll see what happens, but those are the main plays. As far as everything else, I did make a couple of plays. I went both ways on IBM, and they did miss on earnings. I don't know, 7%. I think it was pricing in like 5 or 6. We might get lucky there. We have 165s on the IBM, so we got a little bit of time, but played both ways. That was the only play I made today, believe it or not. We were talking about the downside on Meta, and now actually, before I get into any other plays, I have to tell you what was going on with that. This was a big deal. It even started to flush during the conference call, because they were talking again about expenses and ramping into AI. So essentially, their earnings wasn't bad. It's not like people were worried about users or how much money they're making. There was a slight guide down to the lower end of next quarter's guidance. That was the bad part. And then the language around their spending, and then some of the guidance, pretty much the lower end of their expense ranges that they just guided for a couple months ago, that they just raised even 3 months ago. They raised them by like $2 billion here, $5 billion here, and pretty much the expense part is creeping up. The language around spending and spending around AI development, that is going up again, and that is what got people worried, and we'll see how sticky that conversation is. And really, the sad part is, it was like last earnings. Last earnings, they had a lot more beats and bigger moves and guidance and what they were expecting up, but when they were talking about expenses at their last earnings, they had a brand new dividend and a $50 billion share buyback that they were also talking about, and a lot more AI, but they weren't talking about spending as much. But the language was there, but now added on to that, and then nothing else to fluff it. That's why you had this effect, but it did drop a little bit more during the conference call. So post-earnings, either crazy rebound or sell-off down to the 400s. I think even 386 would be the next level, and then we'll see what type of range. You did see what happened with Netflix, so keep in mind those ranges in the post-earnings move. So we'll find out, but those premiums, that's going to be the real answer. How do they value tomorrow and even after the move? Remember, Netflix, I waited until the next week, because even after the earnings and after they dropped, those premiums still sucked, and we got them a lot cheaper, I think 60% cheaper, just by waiting till the Monday. So we'll see what happens with that, but watch out for Meta. That was the main thing, and again, it brought down everything. Spending talks, it brought down Google and all that, so there was an effect. But besides that, I only made the IBM play, no Meta, made the Amazon, made the Google. I did a Tesla in the morning, so they were up off the bad earnings. I was down to ride it out, and I noticed that the calls, they didn't have too much of a premium, so I went with the post-earnings continuation. I grabbed 2 of the 187.50s for 41 cents in the morning, and then I think 30 minutes later, they shot up there. I sold one of them out for 89 cents, got my $82 back plus $7, and now I have a free Tesla till next week if it wants to continue, but you saw how that kind of sold off. Other than that, we made those plays in the morning, and that was about it. But I'm still not in any new gold plays. Going to ride that out. I am watching gold a lot. I would keep an eye out there for the 80s. Keep an eye out here for the bonds too. Like we said, with what's going on with this divergence in the data this week, there could be an opportunity. Otherwise, play the earnings dynamic and see which one's going to have a bigger sway and move the pendulum as it comes out. But Chad, That is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, the habits are like the ocean. I hope you respect them and understand the power that they hold. But Chatadonia, drink that water. Stay hydrated and healthy. Get your head in the game and stay in earnings mode and keep the armor on. But I'll see you in the AM and horn.